Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
For those of you that are familiar with Elliott wave, for instance, you know the idea of there being two-wave and three-wave trend developments. So this is the concepts that we're going to go into next. I do want to address one question really quickly. There is a question on whether this session is recorded, and yes, ISE does have a recording of this session, so it will be made available upon their website in the archive session, and also you'll get a copy of it sent to you via email. That'll have the link for you to view it as well. So if you do have to boogie, as they say, don't worry, because you will definitely be able to review it later. Also, if you're more interested in learning about the concepts that I teach in this, I go into much greater detail in each of these building blocks, as well as some of the other building blocks that I use in my course that's located at swingtrader.net. So it's swingtrader.net. Don't be confused by the fact that it does say Swing Trader, because even though that's the site that I originally developed when I was swing trading, obviously I do much more now, and the course goes over concepts from scalping to longer-term position trading as well. Also, I will make a copy of the PowerPoint available. ISE will send me a copy of those of you that attended, so I will send out an email that has the link that shows the PowerPoint so that you can print it out as well. Now, going back to this third pattern, or this third building block of price development, what we're looking at now is trend development. Now, like I said, I never really read any books or anything about the market or learning how to trade on the market, but something that I did see often was that a lot of these trend moves really were coming in three waves, and a lot of the corrections were two-wave corrections. Later on, I learned that this is a concept that has been made very popular by Elliott, and so we're going to kind of look at some of the traits of this. Now, if you want to ask me questions about Elliott wave theory, I can't answer them for you because it's not something that I've studied. I really don't go into a lot of studying other people's methodologies, but you are going to find that there's going to be a lot of overlap from, one type of trading to another, and this is just one of the concepts that is very similar to his. Now, when we're looking at this price development, one of the things that I noted as I was studying these trend developments is that, yes, you do have three-wave trend development and two-wave corrections. However, in order for you to really say that the odds are high for a third wave, or that this is really going to be the last wave in a trend, there's a couple of things that have to take place. The main one is that these corrections between each of the waves on the upside needs to be very similar in terms of how long they take to develop. Those of you, for instance, that have seen trend days in the market where it just seems like there's one wave of buying after the next, and you can't really tell, is this three waves, four waves? It maybe looks like 7 or 8 waves, and you become confused because you think, well, I thought for sure that these people said that trends come in 3 waves. Well, not necessarily all trends come in 3 waves, but if you see that the corrective times, the time it takes for the pullback from number 1 here to come into some sort of support and stall and then head into number 2, if you see that that's very similar to the time it takes coming off the high of number 2 into that correction or support level, then the chances are that after a third wave or a third push higher, you are going to see that trend channel breaks. So the trend channel, for instance, is just connecting these lows and pulling them higher. Now, you might get a slightly higher high where it does that 2T pattern that I told you about, or it might just reverse sharply and head lower with something like an avalanche, which is just another term that I've used where you have a sharp downside move, a base, and then the reversal on the downside. So this breakdown here is something I call the avalanche. And these are just ways that this market can correct, that a security can correct off of that third wave higher. What does not tend to happen, I mean very, very rarely, is it will not be able to put in a fourth move that is comparable to the extent of the second and third move. So like let's say the third move or the second move was half a point on like the euro or something. And then as it tries to put in a fourth move, for instance, it's not going to usually become anywhere close to what those previous moves were. So even though you might have an attempt at a higher high, it's not generally going to be able to sustain that move. So it's not something that you always want to say, well, it's the third high, I'm going to go short here. Because you have to watch other things such as pace and momentum. If at this third high, for instance, the momentum shifts, so let's say you have some sort of momentum shift at this third high. This is a third high in a larger trend. So like here's the second leg up, and then here's like the third leg up. And so if the momentum is shifting at that high, and you have very slightly higher highs at that third high, then the chances are very strong that you're going to have a sharp momentum reversal or a sharp turnaround off that high. So you can see here where momentum comes into play along with this trend development. And it's something that is going to be very, very important to pay attention to. Because if the move is very strong into that third high, then it's usually going to have to take a bit of a slower time turning around or correcting. And another thing to keep in mind is that that's not necessarily going to serve as a larger reversal for the overall market. What could happen is that coming off of this third leg higher, all that takes place is the security just forms a larger correction and then continues the trend. So, for instance, it could just come into the support level, but it breaks that actual trend channel by forming a longer range and then continuing higher again. So what we're looking at coming off of this third high, for instance, is just that it's going to have a longer correction or some sort of larger correction to break that channel, to break that uptrend move.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.